Good morning, guys. How's everyone been? Hope you had a wonderful Easter. Decided to take a few days off from video recordings over the Easter. It's been a well-needed rest, and now coming back refreshed. Hope everyone's had the same thing. Amazing Easter, and now we are looking at the market again. Let's make sure we are ready. Right, let's look at SPX. So the chart remains a little bit messy. However, a lot of these trend lines may not be in play anymore, but we're gonna have to see where this pullback brings us first. So main thing I'm watching is gonna be remaining as this ascending megaphone pattern since the beginning. Well, after that first move from November. Since then, we've seen multiple rejections. 1, 2, 3, 4. 4 rejections on the upper trend line, and 1 didn't touch. 3 bounces from the lower trend line so far. So this green upper rising megaphone is still the main pattern I'm watching. Now let's go over each of the trend line, what could be looking at. So since the last time that we took a look at the charts. Morning, Simon. Since the last time we took a look at the charts, we bounced from the 0.5 alongside this back test of this trend line. Since then, we have seen a 6% move to the upside. Congrats, bulls. So we exited our bear position back here. Not only because of the bounce from the 0.5, but also the bounce from NAS was at the GP, as we can see right here. And NAS has seen a move of 7.8%. Now, where are we gonna go? Let's make sure to have both our bulls as well as our bear thesis ready and in check. So this new trend line that I'm watching, because we blew through everything on this last move, bouncing from 0.5 makes sense that we're gonna see a strong move to the upside. Now that we are at the trend line from the end of leg 3 rejection, as well as the most recent rejection on February 16th, we're seeing a little bit more of a stall here now. With this, first we're looking at is going to be the fibs of the most recent move from the bounce of 0.5 fib, and nothing really lines up. First level I'm looking at is the previous high, which is just under the 0.382. Let's mark this. And then following that, the second level is the high before that, this little tiny green zone I'm watching, which is just above the GP. So nothing really lines up. And aside from this trend line, which we overshot a little bit, I don't really see a exact reason why we'd be having a hard rejection here. So from here today, now we didn't get to the 1.1 extension. That could mean two things. One, bulls are ready for another leg up to at least touch the 1-to-1 extension target from the most recent projection. Most bullish case scenario, the next target we're looking up is going to be around that 4,300 mark, 4,250 to 4,300 mark. So if we were to move this over, it could take some time for us to get there. But first things first, we're going to have to see what tomorrow's pullback looks like. How strong that is. Make sure to keep an eye on that first 5-minute, 15-minute volume. So far today, this morning, looks like the pullback has begun. So same as usual, what we're going to be watching is the 30, hourly, and 4-hour trend reversal. First, we already have the 30-minute trend reversal. You can see a higher low, lower high, lower low, lower high, and now we're making a lower low, breaking down under yesterday's low. towards the end of the day, yesterday's low. Already trend, I wouldn't really say that it's reversed. You could say it, lower low, lower high, and now making a lower low. But 4 hours, noticeable, we are breaking under that 4-hour 8. For those of you that were in the chat room or are in the chat room, you can see yesterday that first thing I said, 4-hour 8 is your guide on SPX. So now that the pullback has begun, we're going to have to watch where it goes to. I'm thinking because of where we're starting to pull back, strong bull case scenario would be right here. Now, bear thesis is, so we already backtested this trend line. Don't need that anymore. Bear thesis is we come back over the next few days into the end of the week, beginning of next week, for another touch on this lower trend line of the rising megaphone. So when we look at it, there's already been 3 touches. The next time we touch, we could just completely break down. That is the bear thesis. Have both of your bulls as well as the bear thesis ready. Make sure you're looking at having a game plan ready. What you were going to be doing in both case scenarios. So let's take a look at some other indices. Next one. Wow, it's been a while since I recorded. Can't even talk properly now. All right, first one is going to be NAS. NAS, we have not had a back test of this previous trend line that was keeping us down before since the pullback of February 16th. That's going to be a huge pullback. So this is a spinning top candle from yesterday. Reversal candle. Was it spinning top? Similarly on SPX as well. And then there's Russell. There's nothing too much. Okay, so on NAS, fib wise, need to update this. Okay, now it's a little bit out of line. This was the key level that I was looking at for GP, in line with this previous support resistance. And now I probably be looking at more so at this level, where we can see chop around here. All right, first things first, key zone, that's right underneath, with 0.382 right under the key zone. And also a trend line from back here where we found resistance and now support. Then another resistance before we broke over. So it makes sense. There's multiple confluences right here at the 0.382. Next level down would be the GP. Actually, 0.5. 0.5 would be the next level down I'm looking at. All right, Russell pulling back, bounced from the daily 8 yesterday, and now we're just about losing it. Dow was the weakest based on the previous bear divergence, but then because the market decided to bounce, so Dow negated the bear divergence. Let's see if there's a new one. No, there isn't. Okay. Okay, so let's take a look at a few things I'm noticing that could be cause for concern, the bear thesis. First, US 10-year. We pulled back on this daily bear divergence, and the pullback was relatively weak. And now we have a daily bull divergence that has formed. We're going to have to watch over the next few days whether if we make new highs, test this upper trend line again. But US 10 years is looking strong. Daily bear divergence, lack of follow through, now daily bull divergence. So that's reason number one for bear thesis. VIX, we are right at that key level that I was watching. We did break down from the wedge, the long-term wedge that we were watching. However, we are holding that key level below. This key level is about 1757, about 1750. If you were to look at the long-term chart, I only drew it from here, but you can see multiple rejections from the same area. 1, 2, another few. Lots of rejections right here. So now I'm looking for this to become support. And we can already see that wick forming from the lower side. Would expect a move to the upside from here while the market pulls back. So reason number two, gold starting to bounce. Double bottom. So this is the exact pattern that I was looking at. You know, we pull away, come back, previous high, and it lost it by a little bit, bounced, and then double bottom and start to move. Now let's take a look at this. This chart is more so a dragged out version of it. So we overshot, and then, no, not overshot. We had a nice bull move, came back, found support from previous high, found support again, and then multiple supports on the bottom before the next move up. So as mentioned, this is a dragged out version because you can see the time frame wise, sharp pullback, but found that bottom. Whereas this one, slow pullback, double bottom, and we're finding that bottom on the previous high. Now the question is whether we're going to see this move upside. If it does, that would be a concern for the market again. So yesterday we got to the inner trend line within the channel where we found support and support here, multiple supports. And yesterday we got to the trend line. Today we're having a slight rejection from it. Last time we saw a complete rejection from it, forming the double bottom. So gold, I am still bullish on gold, but I want to see a break over this trend line as a first sign of confidence. Next, US dollars. As many of you know, US dollars is the one main thing. If you were to watch any leading indicators, US dollar should be your top watch. So when I look at US dollars, we started pulling back as the market began to bounce. And now we have a daily bull divergence. US dollars finding that back test of the channel, upper trend line, very bullish. Now that we've got the back test, before this was a breakout fake out, and now we have a confirmed breakout coming back to back test with a daily bull divergence. I am very bullish on US dollars, meaning the market could be very bearish. So I will continue to watch US dollars, and I do recommend that you continue to watch US dollars going forward for the next, at least very closely for the next few days. We're going to have to see where this daily bull divergence takes us. If we see a follow through making new highs, breaking this next resistance, this next key resistance. Actually, there's one more. Let's see. There is a couple more resistances after that. But now the chart just looks messy. So after these next three resistances are broken, there's going to be a lack of resistance all the way up till 96,226. Let's see what the follow through looks like on this daily bull divergence. It is looking very strong to me. All right, next is Bitcoin. So there's a potential for a rising wedge on Bitcoin. We have had two touches on both upper and lower trend line now, but with this move, lack of move for the third touch, and lack of making new all-time highs, I'm thinking we might break down from here. So let's watch the reaction at the lower trend line. If we do break down from here, what the move or what I'm looking at would be a back test of this previous high, 42,000. Still haven't back tested. The last time that we pulled back was 43,000. Missed it by $1,000. So bounce from GP, very nice. Lack of follow through, a little bit of a red flag. If you're in Bitcoin, be careful. I've been saying that for a long time on Bitcoin. 1-to-1 extension is way up here. Okay, hold on. 1-to-1 extension is at 69,000. So we're gonna have to watch what this pullback looks like. First sign is gonna be the trend line, and then ideally bulls do not want to lose the GP, which is just under the trend line. If we do lose the GP, that is going to be a significant red flag, and there is going to be a potential of this 42,000 backtest, which lines up with the GP of this whole move. All right, let's take a look at Tesla. Actually, before we get into the hottest tickers, let's take a look at VIAC. Ooh, gapping up. Right to yesterday's high of day. Is that right? Yeah, right to the yesterday's high of day. And still under that 4-hour 8. Okay, so that's a good sign. We've been getting pushed down from the hourly 8 for a long time. And as of yesterday, we shot it over first thing in the morning. And now we are holding that hourly 8. So very notable difference. The selling may be done. Decreasing bear volume and now bull volume showing up. I'm interested in this. So from here, and it looks like it's negating what the market's doing a little bit too. While the market's pulling back, it's still gapping up. So it's very interesting. I would be interested in this ticker. Even if we were to just look for a bounce to the 0.382, you'd be looking at $63. VIAC looks great. So this was a must hold for VIAC. GP of the whole move since pandemic low, wherever that was. Yeah. So GP since the whole move since pandemic low, 10 times, 10.1 all the way to 101.97. GP lining up with the previous high. This was a must hold zone. If we were to lose this, next down we're not looking at too many supports. 37.32, 34-ish, 31. So it could just completely break down if we were to have lost this level. Now VIAC is looking pretty great. We are still in that daily. RSI is still at 30. So there's lots of upside to come. 4 hours still oversold. Already bouncing already. So chart looks great. All right, hottest tickers. First one, let's take a look at Tesla. So Tesla found a support at that lower trend line of the long-term channel. This channel has been holding us. We've been in this channel for a very long time, since pre-pandemic pullback. Pandemic pullback was where we found the top, and then we came back, didn't touch the lower trend line until this touch. This was a breakout, fake out, pull back, another touch on the lower trend line. So that's 2 touches, and now we have found our 3rd and 4th touch. You can see another rejection on this upper trend line. So came back. Now the fact that we're pulling back from the 0.5, I don't like this zone anymore. This looks better. Right. The fact that we're pulling back from the 0.5 and we still can't break over this key zone where we found resistance and a little bit of support here, and then another couple rejections here, 1, 2, 3 rejections here, and now we're finding another rejection here. So this is a must break zone 695 to 718, but the fact that we're pulling back from the 0.5 brings me to think that the chart is relatively weak. So what I'll be looking at would be something like this: sharp pullback followed by a higher low, lower high, and then goes into a triangle pattern. Sharp pullback followed by a higher low or lower high and then higher low. So now we're looking at a potential for a very dragged out. The last time that this happened was 54 trading days of sideways action before it broke out from the SPX uplisting news. Meaning, let's say, oh, this could be even longer actually. A lot longer. Just based off of this, 40%, 30%. So the pullback's been more, 33% more than the last time. So it's 50 some days. We could be looking at 70 some days. What is that? Just using simple math. Not, of course, not going to be correct by all means, but using it as a projection, what we could be looking at is a long-term wedge going that way, or alternatively could be, as of right now, we are looking at a wedge going this way, a rising wedge. So there's two touches on both the upper and the lower trend line already. Let's see what the pullback looks like. Makes sense, we're going to find a third touch here. Lines up with the lower trend line of the channel as well. So Tesla, right, as of right now, this moment on the daily, am looking bearish on it. Still cannot break over this key zone. This is going to be key to watch for. This zone right here. Okay, next is, morning everyone. Let me know what tickers you'd like reviewed. I'm gonna go over the hottest tickers first, and then tickers that people are likely looking at. So next is TDOC. Daily bull divergence. As of right now, lack of follow through. Kathy has bought, I think it was like 14 buys over the last 30 days on TDOC. So we found nice, we're bouncing from a nice area where it was this trend line, triple support, quadruple support from down here, and now we're bouncing from it, but there was a lack of follow through. I don't think it doesn't even look like we got to the GP. Yeah, we didn't even get to the GP. So TDOC remains weak. Similar idea with PLTR. We are trading over that 88 on TDOC. TDOC. Still in that key zone though. I'm going to want to see more confirmation on TDOC before considering entering a position, especially given that the market is currently in the pullback phase. Doesn't make sense to enter strong bull positions. Slight increasing in bear volume. Let's see if we get another touch on the lower trend line. Lack of follow through on daily bull divergence, would not be touching it as of right now. PLTR, similar idea. I don't think this is going to be the case. So PLTR, decreasing daily bear volume, finding support on that 88. today we're gonna have to see whether if we see a bounce, negate whatever the market is doing, whether it's gonna be bull action or bear action on the market. Let's see what happens today. If we lose that 88, would not consider touching it. Even as of right now, the chart remains weak. So, you know, it's had a very big pullback, and Kathy was buying it before. $20, so that's 55% pullback. Ooh. So there's lots of upside if the bounce were to begin. That's the key word though. If the bounce were to begin. As of right now, we can't even get over this previous key support in between that 24.56 to 25.16. So PLTR, not too interested, but we'll be keeping it on top watch. Next would be PDD. I think PDD is one of the more bullish tickers out there. Same idea, Kathy's been buying it. And we found, so very similar chart to TDOC, we found support at that GP with a daily bull divergence, and now we're seeing some decent follow through. However, this trend line where we found two previous touches, first big pullback where we bounced from, we're now seeing rejections, resistance from it. So there's been three touches actually. One beginning of the trend line, bounce, and another support here. Now we're seeing rejection from it. If we're to make over this trend line, there's going to be plenty of upside to come. So PDD is looking better of the three: TDOC, PLTR, and PDD. Keep your eyes on PDD. Wayfair, hovering around for some time now. RSI is ready to go. Choppy action, just chopping around that 88. It's not really a ticker that you can, that's going to be easy for day trading. But remember, what we're looking at is the monthly bull flag, and now we are seeing follow through from last month. This month we're pulling away from it, and I wanted to see further pulling away this month going into next month. So this chart can get pretty extended. Wow, 83% away from the monthly 8. That would bring us to roughly about that 1-to-1 extension target, 550-ish. 83%. You will at least get to the 500 zone. So let's watch the follow through. Don't forget about Wayfair. Don't sleep on it. You know, you could do a longer term option if you're looking at options. Or what I regret doing is I should have just picked up commons, because I've been in this trade for I think 3 months now. Ever since December, January, the beginning of this bull flag, and since then we've moved up $120, whereas the options that I was testing, the leap year option, moved up basically zero. So next time, make a note of myself, you know, make sure to play commons if we're looking at monthly bull flags. My goodness, 121. That's already a 55% move, while the leap year options are zero. Basically break even. All right, that's the hottest tickers. Let me know if you guys have any tickers you want to review. Good morning, everyone. And before those come in, I'm going to take a look at a few other tickers. First one, Airbnb. Trading over that 88. Decent bull volume yesterday. Upper wicks are forming. So there is a clear resistance somewhere around here, which makes sense. You could draw a zone somewhere around here, but just to make it clearer, I'm just going to put a line there. You can see multiple rejections before becoming support, and chopped around it, support again, and now we're seeing resistance from it. Chopping around that 0.5. I don't like it. Not having too much of a gap down open though, so that's good. Market is bouncing right now. trying to, we got too far extended from the 30-minute 8 on SPX, so bouncing back to it right now. It is at least holding up relatively okay versus the market pullback as of this moment. Keeping a close eye on Airbnb. It is a vaccine play, daily bull divergence that has seen a little bit lack of a follow through. Unable to even get to the GP, so wouldn't want to be in it as of right now. But overall, the chart looks like it's okay. I don't imagine it will break down completely. If you look at a lot of other charts that look similar to this, you will find that most other charts are already at the IPO low or somewhere near it. Whereas Airbnb is holding the GP alongside IPO high, that key zone, 2 touches, and now we're bouncing from it. So overall, Airbnb still looks okay. The likely scenario of Airbnb could be a wedge. Let me delete this. Should be somewhere around there. Okay, next is morning Vogue K. Morning DG, long time no see. Let's take a look at MA. Oh, MasterCard. Didn't touch a GP on that one. I'm seeing a rising wedge. It could be a big one, it could be a small one, depending on how you look at it. So a very clear rising wedge right now. Oh, didn't draw that perfectly. Somewhere around there. Unable to close over it. This wedge is your guide. Use this wedge as your guide. There could be a smaller one just because this did have a wick under and a wick over. So you could draw from here as well. But use this wedge as your guide. The touch on the lower trend line would be ideal entry. As of right now, I don't see any if you're thinking of bull entry, you're a little bit late. This touch of GP was the perfect bull entry. Well, perfect bull entry would have been down here from the trend line. But most recently wise, GP would be the ideal entry. As of right now, we are already in a bullish momentum with market potentially pulling back. So wouldn't be looking at a bull position in MA as of right now. I want to see what the market, I would want to see what the market pullback looks like first. It's this kind of moments where, you know, it just, I'm still amazed at it every now and then, how nicely fibs work out, you know, especially that GP area, right to the GP, and then we're seeing a bounce. So as of right now, we are seeing a little bit of a stall at the 0.5, similar to a lot of other charts that we looked at today. Oh, we only got 10 minutes left. Okay, let's speed this up. So yeah, wouldn't be looking for a bull position right now. You gotta, you know, you're right in the middle of no man's land, no trade. Think about your risk to reward. Risk to reward, the reward wise is about 6%. Your risk wise, it's about 7%. So risk to reward does not make sense right now. Let's watch for where the market is going. I like that. I like how there is a very clear pattern on this name though. So very easy to play off of, you know, entry on the lower trend line, exit on the upper trend line. From here, we are getting closer to that apex. So towards end of summer, fallish, I would expect a breakout of this name, which makes sense. It lines up, once the lockdown, this is one of, you could consider this as a vaccine play as well. As the lockdowns restrictions ease up, this could be a vaccine play where people are going out, they're spending more. MasterCard is one of the top plays for vaccine. It's a little bit more conservative versus some other ones, oil, airlines, cruise ships, but it's a steady mover. So I would consider it as a core position, long-term core position, just using commons versus playing options, right? YETI. Hey, is that the mic thing? The YETI mic? I've been thinking about picking up a YETI mic. YETI Holdings. Okay. This reminds me of NVDA and Amazon. Sideways action, long time. Not as long as NVDA and Amazon. But so with this, given the lesson learned from trading NVIDIA as well as Amazon, wait for a clear signal. This choppy action, it could just chop you straight up. Nice bull volume spike here, following that gap down. So let's find some trend lines. Now, because of this lower wick, I will use here. Yeah, nice. Okay, that's your support trend line, and looks like this is your resistance trend line. So right now it's forming a wedge, short-term wedge that should see a break soon. Now what you want to see is a close over this trend line. That is a key. Yesterday it was a breakout fake out intraday wise, but you're gonna want to see a close over this. My personal trading style is I used to just play the break of this. I've been faked out too many times, such as like yesterday's candle. So now what I like to do is, you wait for it. Don't FOMO. Don't let fear dictate your trade. There's no point in FOMOing it. You'll get a better entry, and the better entry will be even better than you think, especially if you're playing options. So if it does break out, you start seeing a close over it, and then starts pulling away a little bit. Two possible cases. First is you can see an immediate backtest. That could be your entry if you're fast, or you could be looking at longer term. Since you're looking at the daily chart, daily wise, a backtest of this trend line, then that would be your entry, most ideal entry. And you can see that there's a rejection, so there is a zone around here too. So if we do break out over the next few days, I would anticipate a backtest of this key zone lining up with the trend line. If not, based on yesterday's candle, I would anticipate pullback from here. Breakout, fake out generally follows by a little bit more bearish action. If that is the case, GP, first signal, followed by most ideal entry, gonna be around that lower trend line. But I don't think we would touch again. It's been 1, 2, 3, 4, 5. Well, major touches wise, 1, 2, 3, 4 touches already, and now there's 4 touches on the upper trend line. So there's a chance. If you want to wait for it, most ideal entry would be the lower trend line. Next, DOCU. It's been a long time since we look at DOCU. And that key zone is still in play. So we're looking at it from back here. This key zone, that's where we drew it from. Then we had slight rising wedge. Something along the lines of that. And then we saw bear break, but finding support at the lower part of the key zone again. I don't like trading DOCU, just like NVDA, and I gotta take a look at NVDA again. It's been a while. 160, that's half a year of sideways action, lack of follow through. Yeah, if you're looking at playing this short term wise, this lower trend line or lower part of the key zone would be your entry, and then upper part of the key zone would be your exit. You can see chop around it before, so we could see chop around it again. NVIDIA market's bouncing nicely right now. 4 more minutes. All right, so NVIDIA, nothing interesting. Let's take a look at what do you got? GDDY. This could be a very good trading ticker. Lots of decent moves, chopping around that same zone. So looks like it's a channel to me. Okay, maybe not. Those are your two key trend lines. This could be a very nice ticker for, oh, it's GoDaddy. Very nice ticker for just trading wise. Every time it touches the lower trend line, buy. Look at this. So right now you're in the middle of the zone again. No man's land. Wouldn't be trading it. You could, but then you might see choppy action coming up very soon. You're right around that 0.5 as well. Your risk to reward, you know, your reward is likely GP 16%. Risk to reward is still a little bit there, but it's about 1-1. You're no longer looking at 3-1, 5-1 kind of thing. So depending on how you want to do this, the momentum is there, increasing bull volume, breaking over lots of resistances. I would keep a tight stop if you're looking to play this name. All right, gonna keep it at that. There's only 2 minutes left. Still gotta feed my dog. Hope you guys enjoyed the video. It's been a while. Thank you guys for all your support, for coming back to look at watch the video. If you know anyone that is interested and could benefit from the content we provide, please consider sharing our channel. And please consider subscribing. We provide new videos daily. Remember, the best compliment you can give is by spreading the word about our channel. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.